Hello to all our financial literacy enthusiasts. Today, we'll unravel the secrets behind the buzzworthy power play setup, a strategy that's earned its creator, two-time U.S. investing champion Mark Minervini, quite a reputation in the financial world. Have you ever wondered what powers those stunning returns? Mark achieved a staggering 334.8% return in just a year during the 2021 U.S. Championships. Today, we'll break down the magic behind the strategy. First, let's get into the essence of Mark's success. While he has various methods up his sleeve, the foundation is consistent. He builds upon trends, volume, breakout points, and most importantly, impeccable risk management. Mark once shared, "I've honed my style over the years, always seeking stocks in strong uptrends emerging from consolidations." It's interesting to note that the power play setup mirrors aspects of the high tight flag, a strategy popularized by William O'Neill. This pattern consistently showed over a 67% success rate in a 10-year study. But what's the key? It all begins with a powerful uptrend and a subsequent consolidation. Think of this as a build-up before the next significant move. Diving deeper into Mark's strategy, there's an emphasis on understanding the stock's underlying demand. Contrary to what most believe, the best uptrends often emerge after significant price hikes. The astute investor recognizes this momentum and harnesses it. Then comes the pivotal volatility contraction pattern. This pattern showcases the balance between demand surges and profit-taking. As price finds itself under resistance, volume starts to wane, signaling a potential breakout point. Now, for the fun part, the breakout. What you ideally want is a breakout with substantial volume backing it. No volume? It's best to step back. Identifying the breakout is just part of the equation. It's also essential to consider your stop loss. A strategic placement, possibly just below the pivot, helps define your risk. This risk clarity becomes a game changer in determining the strategy's success. But enough about Mark, let's talk about some other legends. From Nicholas Darvis with his box method to Jesse Livermore with his pivot points, or even modern wizards like Christian Koulamagi, the consistent themes remain: demand, consolidation, volume-backed breakouts, and low-risk entry points. Recently, Mark shared a fascinating Dow Jones chart tracing back to 1903. The chart, true to the theory, highlighted volatility contraction patterns backed by volume and supported by moving averages. And if you're still here with us, enjoying this financial deep dive, don't forget to hit that subscribe button for more enlightening content on financial literacy. Expanding on the concept of the power play setup, one cannot stress enough the importance of market psychology. At its core, every trade, every surge, and every drop are the collective outcomes of traders and investors reacting to information, trends, and yes, emotions. This is where the human factor in the stock market becomes evident. The sentiment around a particular stock or the market as a whole significantly influences the patterns we observe. When Mark talks about the volatility contraction pattern, he's tapping into the rhythm of the market. As traders, we're dancing to a tune set by a complex web of data, psychology, and instinct. Observing a stock that's bubbling with potential is akin to sensing the crescendo in a piece of music. The anticipation, the build-up, the sudden quiet, they all hint at an impending breakout. What's more, every stock has a story, and this story is narrated through its price charts. With the power play setup, what we're essentially doing is becoming adept storytellers. We learn to read, interpret, and predict the next chapter in a stock's journey. Let's dive into another key element of Mark's strategy: relative strength. Relative strength is a metric that compares a stock's performance to a broader market index. Stocks that consistently outperform the market, especially during downtrends, often have the inherent strength to lead during the next market uptrend. Mark's strategy often emphasizes finding stocks with superior relative strength, as these stocks often exhibit the coveted power play setup patterns. But here's the kicker: not all setups will play out as expected. That's where the discipline of risk management becomes paramount. For every setup that leads to a grand slam, there might be several that falter. It's the law of averages, and understanding this is vital. Traders need to have the mental fortitude to accept small losses while waiting for the big winners that can exponentially grow their portfolio. Diversifying one's knowledge base is crucial. While the power play setup is potent, integrating insights from global markets, different asset classes, and even macroeconomic indicators can provide a holistic view. For instance, understanding global economic cycles, currency fluctuations, and geopolitical events can lend an edge in predicting market movements. Now, consider the importance of technology in today's trading landscape. Advanced algorithmic trading, AI-driven predictions, and real-time data analytics have revolutionized trading. Our scanner, designed with precision algorithms, factors in multiple variables, offering a more refined list of potential trades. Let's also shed light on another essential aspect: continuous learning. The financial markets are ever evolving, with new instruments, strategies, and technologies emerging. To stay ahead, one must be a perpetual student. Platforms like Financial Literacy aim to bridge this knowledge gap, ensuring that traders and investors are always equipped with the latest insights and tools. A pivotal, often overlooked component in the financial world is mentorship. Every renowned financial expert, including Mark Minervini, stood on the shoulders of giants, learning from predecessors while refining their unique strategies. The journey to financial proficiency is seldom solitary. It's a path often illuminated by mentors who share insights, pitfalls, and success stories. Consider the vast online communities, forums, and social media groups dedicated to trading and investing. These platforms, populated by novices and experts alike, offer an invaluable treasure trove of knowledge. Real-time discussions on market movements, stock recommendations, and strategy validations provide hands-on learning, a virtual trading floor, if you will. Moreover, continuous feedback is crucial. By engaging with peers, we expose our strategies to scrutiny, allowing for validation or critique. Such engagement not only sharpens our tactics, but also builds resilience. Every trader will face losses. What's essential is how we learn and bounce back from them. Having a supportive community can make this recovery faster and more efficient. Then there's the role of technology in fostering these communities. Today's digital age has democratized access to financial knowledge. Gone are the days where Wall Street insights were shrouded in mystery, accessible only to a select few. Now, with webinars, online courses, and trading platforms, even a novice from a remote corner of the world can tap into global financial wisdom. To truly harness the power of financial strategies, such as the power play setup, an integrated approach is key. Blend the precision of techniques, the wisdom of mentors, the support of communities, and the prowess of technology. This holistic strategy ensures that traders and investors are not just prepared for the markets of today, but are future-ready as well. In conclusion, understanding these patterns backed by a well-researched strategy can be the key to unlocking significant financial success. As always, knowledge is power, and understanding these strategies is the first step towards financial empowerment. Thank you for tuning in to Financial Literacy. If you found this video valuable, give us a thumbs up and subscribe for more insightful content.